You've probably heard most of these your entire life, from your parents, from your teachers, maybe even from your bank. And because they came from people you trusted, you believed them. But some of the most common financial advice in America is wrong. Not slightly off, wrong in ways that are quietly keeping you broke. Here are the 7 biggest money lies, and what to believe instead. These aren't fringe theories. Each one is held by the majority of Americans, and each one is costing you thousands of dollars every year. Some of these will feel uncomfortable. That's the point. Real financial progress only starts when you challenge what you think you already know.
Lie number 1. Saving money is always the smart move. Everyone tells you to save. Your parents told you, your bank tells you, and on the surface, it sounds responsible. But here's what nobody tells you. A standard savings account earns between 0.01% and 0.5% per year. Inflation historically runs at 3% to 4%. That means while your money sits in savings, it's losing purchasing power every single month. You feel safe, but you're falling behind. The lie isn't that saving is bad. Saving is a foundation. The lie is that saving alone is a wealth strategy. It isn't. Saving is where wealth parks temporarily. Investing is where it grows.
Lie number 2. You need a lot of money to start investing. Most people think investing is for people who already have money. So they wait. When I have more saved up, I'll start. That moment rarely comes. Here's the reality. You can open a brokerage account today with $1. Fractional shares let you own a piece of Apple, Amazon, or an entire S&P 500 index fund for the price of a coffee. The most expensive thing in investing isn't the entry fee, it's time. Every year you wait is a year compound interest isn't working for you. The people who build wealth early don't start with more money. They start with less, and they start now. Lie number 3. A high income means you're building wealth. You've seen this person. 6-figure salary, new car, nice apartment. They look successful. But ask yourself, what is their net worth? Income is not wealth. It never has been. Income is fuel. What you do with it determines where you end up. There are people earning $150,000 a year living paycheck to paycheck. And there are people earning $55,000 quietly building 6-figure investment portfolios. The difference isn't what comes in, it's what stays. Lie number 4. All debt is bad. Avoid it at all costs. This one is common in households where money was tight. Avoid debt. Credit cards are dangerous. Borrowing is a trap. In some contexts, that's true. High-interest consumer debt at 24% APR is genuinely destructive. But there's another kind. A mortgage at 6.5% on a property appreciating at 4% per year. A business loan funding a product generating 3 times the interest rate in revenue. Debt is a tool. Like any tool, it can build something or destroy something. The lie is treating all debt the same. Wealthy people don't avoid debt, they understand it. Lie number 5. Pay off all debt before you invest. This sounds logical. Get out of debt first, then start building. But the math doesn't support it. If your student loan is charging 5% interest and the S&P 500 has averaged 10% returns over the last 30 years, waiting you 5% every single year in lost growth. The answer isn't either or, it's both simultaneously. Keep minimum payments on low-interest debt. Direct the rest toward your investment account. Time in the market matters more than being debt-free. Lie number 6. The stock market is too risky right now. You've heard this one recently. The economy is uncertain. Tariffs, inflation, market swings. So people say, now isn't the time to invest. But here's what the data shows. Every decade has had a reason to wait. The 2008 financial crisis, the 2020 pandemic crash, the 2022 rate hikes. In every single case, the market recovered and reached new highs. Nobody can time the market. Not professionals, not algorithms. What protects you isn't timing. It's time. The people who stayed invested through the 2020 crash and didn't sell saw their portfolios fully recover within a year. The ones who waited for the right moment missed the fastest recovery in modern market history. Lie number 7. You need a financial advisor to build real wealth. This isn't about whether financial advisors have value. Some do. But most people believe you need one before you can even start. That's the lie. A low-cost index fund tracking the S&P 500 has outperformed the majority of actively managed funds over any 15-year period. Spiva data confirms this year after year. You don't need someone to pick stocks for you. You need a strategy. Contribute regularly, diversify broadly, don't panic sell. That's it. The belief that building wealth requires expert access, that's how financial services companies keep the average person dependent. You don't need permission to build wealth. You just need to start. 7 lies. Every single one sounds reasonable on the surface. That's what makes them dangerous. The difference between people who build wealth and people who don't, it's rarely income. It's rarely luck. It's what they believe about money and what they're willing to unlearn. Start questioning what you've been told. That's where it begins. Remember that.